Good afternoon, Wednesday, June 22nd, Simpler Futures Evening Market Update. So follow me here, how we got to where we are, and let's talk about the levels that we need to kind of pay attention to. Consolidated up here in the 4100s for a while. CPI Friday right there. CPI print about 4020. It's actually 4017, but say 4020. That was pre-market before the cash open. It broke for 39.60, bid back up 39.80, which ends up being the gap mid right here. Don't worry about writing this down yet, because I've got this illustrated for you, and I'll put the levels up before we close the video. But gap mid right there, 39.80. Then open Friday session, ended up trading down, closing out down here at about 3,900. That was the cash session of Friday. Breaks into this 3-day balance at the bottom right here. Monday, Tuesday, Wednesday last week. 3-day balance. This is going to be important. The main there are two really important prices in here. There's two areas of acceptance within that 3-day balance. They're 37.77 and 40, but we'll get to that in just a minute as well. 3-day balance right there breaks into the lows down here Thursday, Friday last week. Balance down here 36.75. Double top 37.11. We end up coming into the early part of this week, breaking above that double top, breaking back into this 3 days of balance. Remember, we just talked about the 77s and 40s in there, right? Okay. In addition, and I'm going to make a plan here, I promise you. Just kind of follow me with the logic here for a second. In addition, it seems important to the market that 37.50 was last year's open. It seems important because it's been very pivotal, whether it's a mid-century or the market is picking back up on the fact that that was last year's open. I don't know, but 37.50 in the middle. All right. Down here at the bottom, this is kind of interesting. The lows of this move down here from last week were also last year's lows. Last year, open at 37.50, had 36.50 low, and that was the low of the year for last year, and then traded higher into the all-time highs. So here's the way I'm giving you the levels in there, right? I mean, we had 40.20 at the top, 39.80 gap mid, 3,900-ish right there. I'm going to dial that one in for you. Let's go ahead and talk about it. It's not 3,900 right there. It's actually pretty well participated, traded back here prior to its coming back into settling back on that level right there, which produces pretty good size HVN right there. In addition, it's also an end of quarter old quarterly settlement print, and that number is actually 39.12. Okay, that's going to be important. Just below that, you've got a gap mid. That is below that, that 39 by this high right there, that Wednesday high. That gap mid right there is 38.70. That's going to end up being one of your targets. Then into the balance down here that we just discussed, and we're making a case. I'm trying to basically make a case for the fact that we're traded back up into this balance, and so should this thing continue to trade up for a couple more days into the end of the week before I'm with you again next week, then I've got to have targets for you up there, and an over-under in the middle, and then targets in the event that we get a continuation of a break, right? But what I'm trying to do is point out the logic and the means by which that I'm coming up with this plan. Okay. So let's go here. This is the kind of thing I do in the trade room daily. We come up with levels that would be like, targets and that kind of thing, over, under, and everything. So notice in the middle, I would label this one like this. I would say basically this is like the line in the sand right there, 38.50 or 37.50. Okay, so we just talked about why that was year 21's open. That's right between these two areas of acceptance that I've just illustrated back in this 3-day balance, Monday, Tuesday, Wednesday last week, right? And you see, just look at how the market traded today. Look at how it, just go back and look at intraday trade today and see the importance of all three of those levels, and you probably get a pretty good feel for why I would choose to call that the main line in the sand, or over under between those two. All right. So whereas earlier in the week we were discussing in the trade room that we would like to see the double top from last Thursday, Friday be the line in the sand. Well, we're above that now. We're back in between all three of these, and so I'm calling now into the end of the week. I would like to see this act as our over/under, and moving if bullish, and this would be my preference. So if bullish, then moving back to tomorrow, retest today's high and extend it. This is a very important level as well. This has been on our charts for a long time. That fib level goes back from the COVID lows of like 2100 and something, 2170 or whatever it was in the S&Ps on the low, up to the 4808 level, and that's your 382 fib level on that weekly chart. And that ended up being today's high. So, all right, so above there would be to go test last Wednesday. What was it? The Fed FOMC announcement day. That swing high on that. Personally, I really wouldn't look for that to hold, though, and so that's why I've not really labeled that target. With a move back above today's high would be to move to test this, in my opinion, to try to exceed it for the gap mid. And here's where the targets start: 38.70, bullish target 1, gap mid. Trying to go through the reasoning why, right? And then T2, 39.12, 39.11.12. 12 is not only closing the gap, but it also goes back to where all this trade was done, producing this HVN prior to this trade date, the 610 prior to that, and this was already well established before then. And additionally, it's also an end of quarter EOQ old settle print as well, right? So that'd be a target. Just in the event that, and I doubt it, okay, but I'm not really looking this high, but just in the event that we have to worry about, something higher than that, well, then the next thing up I see is that gap mid, that next gap mid, 39.80, and then that CPI print, the news print that's still naked, hasn't been tested since it was produced on that Friday morning. Up at like 40.20, and if you really want to dial that in, it's actually 40.17, but I don't want to get that particular. All right, so targets, 38.70, 39.12 on the top, and you know how to get there. This is line in the sand. All right, now somehow we get a Wednesday midweek shuffle high today, and this thing reaches up and fails at reasonably. The failure would need to be something pretty weak, like just basically reaching up and testing that upper balance print within this 3-day period right there, and fail back down through 50, and it starts to look ugly. Well, then here's the deal. Look, this has been a good hold level, even all the way into and including today at 37.11. That was this Thursday, Friday high. That's what that was, and that came in and and held even this morning, right? So that has been a pretty good level. You can't beat on a door, insistently without finally, the door will open or break down, right? So you come back down and beat on this level enough, and it's finally just likely to yield. And if it does, well, then the 2-day balance Thursday, Friday down here is that would be a hop, skip, and a jump. I mean, that'd be relatively quick, and that certainly it would be. It'd be looking for that, because that's a naked point of control that hadn't been tested since it was produced on that Thursday, Friday end of week last week, leading into the holiday weekend, and then now this week, right? So, but that's pretty close. That's not any big deal. You want to know that's there, and certainly take a little something off if if this thing ended up failing and rolling through line and sand and on its way down. You see this, you got to probably start to take something off, because that'd be a decent little appetite. That would start to whet your appetite. Then what happens is that in the bearish sense, which I'm not really looking for yet, but in the bearish sense, when it does come, and it's coming, I like a little test higher first, but it certainly would be to extend the last lows that we just saw last week. And what those lows were, here's what it was. It was last year's 2021 lows were 36.50. It managed to trade 40, right? So certainly it would be to extend that last low, right? So what I've got for you there in that case is to finally reach down here and give us our bear target 3600. So for that, I've labeled it as 3620 and 3585. Now those levels, they come from our quant indicator, our quant levels indicator. And so basically in a bearish sense, it would be to finally reach down and give us our, our 3600 target that we've been talking about for a while, right? And that's it. That's the plan. Hopefully this makes sense. I mean, look at this chart. It's as plain and bare as anything. It's nothing but just price. No moving averages and a bunch of stuff. It's just price. It's just like, look, we were in balance up here at 4100. CPI happened and it broke. It happened from 4020. It broke to the mid 3980. Once that RTH cash Friday session opened, it broke for this target right there, big balance print into quarter, and low of that Friday right there. We're calling that 39.12. The next week, it gapped open lower, produced 3 days of balance in here, giving you all the important aspects that I can come up with anyway of that 3 day worth of trade. Spent the next 2 days down here at balance. I've given you what's important, what I think is important. I see it's important about that. Now we're back up inside, breaking back up from a 2-day island back up into this 3-day balance to hash this out. And if it wants to be bullish against that over-under that I've given you, then the target becomes that gap mid and that 39.12. If it reaches up small and fails to get through this range, i.e. fails at about 77 and breaks for lower, well then it'll tell you once it's below 50, failing at 77 below 50, it's en route to this balance down here at 36.75. And ultimately it's obviously is going to be to extend this minor low from last week moving into 3600. So that's how I'm coming up with a plan. It's my version of a plan. Hopefully it helps. And I look forward to being with you again at the next update. Till then, good trading.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me